All right, good morning, everybody. I hope you're all doing well. Been a little while, but Mother's Day and this and that, right? So, hope you guys had a good weekend. Hope you guys are being safe. Remember, it's CPI day, so we don't want to get too crazy. I'm having some camera issues, so unfortunately, my stupid webcam doesn't want to work this morning. But it is what it is. So yeah, we just had CPI take place. We didn't really have much of a crazy response off that news. We've kind of just been dragged into buy side liquidity. So if we take a look, right, it's been in a real hurry to try to get up to that previous week's high that we've been talking about. Right, so it blasted through this, okay, very, very quickly. And it's kind of just been on a tear ever since. You know what I mean? So, that being said, if we're looking at this weekly chart, if I take some of this off, we have this weekly high. That's a weekly candle. Each weekly candle has a weekly high, weekly low. Same with each daily candle. They have daily highs and daily lows. If one candle is going to break outside of the previous, obviously the first target will be the previous candle's high or low, right? So in this case, when we opened up, it gapped through this high here from the previous week, and then we just been on a rampage to try to get up into here. There's a little echo, really? Have a little, wow, okay. So, it's kind of weird here. Let me have a little echo. Dang, I don't know what to do about that. As you can see, I've been having some tech issues. Freaking camera doesn't work either. What can I do to fix that? Shoot. Here, let me shoot. If I close this and restart it, yeah. Let me shoot. Let me actually see real quick. Sorry about that. Freaking echo. Let me unplug my mic real quick and plug it back in. See if that'll fix it. All right, can y'all hear me? Sorry about that. Hopefully that fixes it. Is there an echo at all? Not sure what would cause that. Oh, Tyler, it's not happening for you. Okay, then it may be something taking place with on your end, brother. Do you have maybe two browsers open or something? Possibly. Not sure. Not sure what that would be. Oh, okay, perfect. Yeah, it happens to me sometimes too because it's got the stream going, and then I have my streaming software. So if I don't unmute one or mute one, or just close the other one entirely, it becomes, it starts having that dumb echo. But yeah, so like I said, we've been aiming for this high for weeks, right? So when price got up into here, we also talked about, or once it hit that low, which was at a 1 year order block, which we were ahead of. Obviously, price ended up running higher. We also had a discussion in my private community and a little bit here about type 1, type 2 dealing ranges. this type 2 dealing range was created. And of course, the impulse here was caused by the tariff conversation. This whole entire massive run higher is due to the great news in terms of the trade deals, specifically with China. The market really likes that, with the positivity around that, especially with all the chaos. The news made everybody feel like the world's ending, a bunch of things like that. So, they suckered people into getting out of their retirement account positions, and, just doubting the U.S. economy, which is so stupid. So, lots of positive things are unfolding. So as a result, we could see that the market is absolutely in love with that scenario. I've been hearing a lot of people talking on the back end about apparently large hedge funds and large entities are putting in the most extreme short that they possibly could put, and supposedly the biggest short in history, against the U.S. dollar. So what does that mean? First of all, we don't know if, that sentiment is even usable or useful, because, if they're out here saying stuff like that, there's probably something else taking place. They want to fool everybody, get everyone thinking a certain type of way. But, if the DXY does end up falling here, which, wouldn't be unreasonable, it would push the indices higher, and we'd get that rebound that we've been anticipating and pretty much have been correct on since we hit that 1 year order block. Okay. And then of course this really significantly amplified that possibility for a price to go higher. And we have seen pretty much, that whole situation take place. All throughout here, we've been calling lots of different entries, different observations. And for the most part, the draw on liquidity has been fairly easy to gauge. It's been a little hectic in terms of lower time frame delivery. But again, if you're managing risk, if you're around the right people, if you're, looking at the right things, you have nothing to ever really worry about. Okay. So you see all these gaps too. This is all basically created by the massive manipulations that are taking place, and prices in a real hurry to try to get certain things done, get to certain places, so on and so forth. And then of course you also think about the uncertainty given the overall landscape. But again, we want volatility, we want chaos for the most part as a trader, right? At least those that have been here for a while, because that means there's volatility. We need volatility for us to be able to trade. We want large moves. We don't want just sideways movement, because it kind of sucks to trade in. You can see kind of February was that type of vibe. But we've been basically identifying opportunities in every condition. We don't care if it's consolidation. We don't care if it's, trending. We don't care if it's seek and destroy. We just lower our risk when we have higher risk environments like those circumstances. Right now, of course, risks are pretty high. We are pretty much on a rampage. There's still a lot of things on the back end that can really shake things up, because the trade deals have had an agreement talked about, proposed, but things are not finalized yet. So, there's still a likelihood that things may, go under in terms of the deals and what's taking place. So again, we want to be aware of those bombs that are resting in the marketplace that could take place and shake things up and go against things that we identify. So yeah, we will continue to proceed with caution. Remember, CPI protocols, NFP and FOMC protocols mean we only have one trade preferably, or two maximum, both at half risk, right? Both scenarios are at half risk. Okay. So, you have to make a determination in terms of which one you prefer to adopt. I personally, depending on the conditions and the likelihood of a particular level being attacked, I generally only do one trade. But again, if the conditions permit it, I'll take two, depending on what happens. If I take a trade and I win, I sideline. I don't care if I make $20. Okay. Any type of profit that's taken down should be held and, taken out the market and then sideline. Okay, because why push in a market that may turn against you and do things that don't make any sense because of the manipulation? You know, they use these news events to manipulate and really, really hurt people. You know, so you don't want to be a victim of that. And, you know, there's always another day to trade. So if something doesn't take place here, then, you know, you can wait for another day. You know, it doesn't have to be, you don't have to be so demanding, you know, because there will be another day to trade. Not sure why this is doubled up like that. I just want one. Why the hell is it? Not sure what that extra line is. It's kind of weird. Yeah, why does that have two? It's so weird. Huh. Whatever. Let me see some questions. Just confused how you see Nasdaq after NFP or CPI. Does it mean we gonna see a weakness? So I don't really look at the data. If it's positive data, I mean, obviously, you know, it may be helpful if we're running higher. But I've seen multiple times where the news will come out and it does nothing related to what the news said. The news that comes out is, you know, pretty much late data. They've already priced in things. So the draw on liquidity is always determined before, you know, for the most part. And of course, we try our best to try to figure out what that move is going to be. But again, a lot of times, you know, things are unreliable if you look at the news. So you don't want to determine whether the Nasdaq or S&P or anything else is interested in going lower, because there's no strength and weakness. You know, there's only interest to go higher or interest to go lower. Supply and demand does not exist in this as well. In terms of the indices, it only exists in commodities because there's true supply and demand factors. But for the most part, this is offering price higher or offering it lower. And again, the news doesn't really give you too much insights unless you're like a insider trader, right? Because they kind of have an opinion on things and move or influence the movement of markets depending on their policies and different things like that. So yeah, you know, there's no strength or weakness. There's only price offering to buy side or offering to sell side, because that's all price is doing. And who's it offering it to? It's offering it to smart money, right? The price delivery is offering things to the ones that are in the know. Okay, so yeah, just to point that out. But yeah, don't put too much stock in whether the news is going to support higher or lower. You know, we obviously do want to, you know, somewhat pay attention to what the numbers are, but we don't want to put too much emphasis on them, because, you know, technicals and the things that we do to determine where price is going to go, they are much more valuable and accurate and reliable than you know, whatever the news data is going to provide. So yeah, CPI took place here. We are in a bullish trend overall, right? So aside from anything that's happening today, the things that have happened over the last couple of weeks, from all the way down here, you know, we've been in position to try to attempt to catch price going higher, which, you know, all of our targets to the buy side have been met, and were talked about before the fact, even on my YouTube lives. This high, and now we're pushing up into some fair value gaps, right? One fair value gap specifically that I have my eyes on for today is this weekly fair value gap here. And we want to continue to study and watch how DXY is going to behave. If we get below this daily fair value gap, that'll pretty much be significant for us to continue to want to see price go lower in the DXY. And in that case, each low here would end up being a target. Then eventually we may end up reaching all the way back down to this quarterly fair value gap here. And of course, if we get outside this daily fair value gap, if it breaks through this weekly wick consequent encroachment that I have highlighted, we'll already have multiple PD arrays getting violated. We have a bearish order block here, these consecutive up candles. So again, if it stays above that, then DXY will look to favor going higher. But for the most part, this, in my opinion, considering the fact that we've been so bearish, and the indices look like they want to go higher, it just seems like we rallied up to a optimal trade entry, aka a premium, with a premium array attached. That's a little gem right there for those of you that trade the optimal trade entry. You always have to have a PD array in alignment with the optimal trade entry. But yeah, so we'll see what happens here. If we could get a displacement, it seems like that's kind of beginning, but we're not going to be able to fully get behind it given the uncertainty in the market until we start seeing further proof and evidence. But I would ideally, if I want to see the indices go higher, want to see this go lower, attack this low, preferably displace through these levels, and then really start to push interest for the indices to go higher, eventually getting to this specific area here. So yeah, as you guys can also see, we have a 4-hour order block here. Price has dug above the highs, right? So hopefully we could continue to see this march higher like this. If we do end up breaking down and violating the midpoint of this 4-hour order block, my attention would then go to this low. Otherwise, I'm going to continue to want to favor price going higher. We are ahead of the open, so we're going to want to see what that manipulation is going to create. It's going to be very important. Of course, there's CPI. We're in that environment, so price doesn't really have to do anything. It could just stick around in here and then just wait because there's so much manipulation on these types of weeks. I don't assume that that's going to take place unless it proves it, which would be retracing back into here and then attempting to go higher again and then just staying stuck. But overall, my target is going to be potentially this high here. We do have this inversion fair value gap here, or just normal fair value gap for now. So if we can get above that, that can also support our idea to try to go higher into this weekly fair value gap. Again, this is where I want my eyes to be, right? My target. And we'll see, right? It's been very, very aggressive, moving higher. So, if it did want to turn around and retrace in some capacity, I would not be opposed to that. And we'd be able to adjust. I would just have to see it prove itself that it wants to do that before I change from the actual trend going higher to a short-term potential retracement, right? What would basically support that? Well, we'd have to reject from here, get back below this fair value gap in here, right? This little inversion or normal fair value gap here. And then if it did that and then broke through the middle portion of this 4-hour order block and breaks this swing low, that's 3 PD arrays that may change the state of delivery for a short time just to maybe come back and accumulate a little bit more down here. I believe this high up here is significant in terms of like a bearish breaker. If I'm not mistaken, yeah. So this high here is a bullish breaker. I'm sorry. So yeah, if it was to again reach down into there, I would not be fully opposed to that, and I'd be totally fine with that. And then we just get in line with that as price prints. But overall, the narrative is bullish. Okay, we are in a bullish environment. We have a shift in market structure above this high, run on stops. We're leaving gaps open, which means to me that this is a balanced price range down here. So we're respecting bullish PD arrays, and we're just continuing to march higher at a very logical level, given what we've just talked about, and the fact that it seems like we're going to continue being bullish is going to be this weekly fair value gap for a potential target. That's also in line with this high here, which is a weekly high. And then again, we have this weekly inversion fair value gap here to also continue to hold or watch hold as we march our way up into these upper levels. Okay, so because it's been so aggressive going higher, there is a risk of us wanting to retrace. Let's go check if there's SMT at the lows here. So there is SMT at these lows. There's also SMT at the highs. So we definitely want to allow the 630 manipulation to take place and wait for macros because, you know, there's a bit conflicting things going on. But again, I am cemented in my assumption that we're going to go higher overall, but that doesn't mean that there won't be any retracements, right? So we just have to continue to gauge today whether it's going to retrace off the heels of this SMT, you know, so it could come down, accumulate, then go higher, or if it's just going to continue to rip higher. Either way, we're going to be able to position when the time comes. Okay, right now the time is not here. You know, we have nothing to get overly excited about until something takes place. You know, I'd like to definitely see this weekly or this 4-hour order block hold and push price higher if we are going to go higher. So I don't want to see us break through, you know, like this fair value gap or the midpoint from this high to that low. I would have liked to see that if we are going to use this day to go higher. Okay, but again, if it does break through that, if it breaks this low here and we get below those levels I mentioned earlier, then obviously my attention may shift to us targeting this low. And then of course, you know, this low, if it was to be targeted, that's definitely where I would see, or I would anticipate seeing a pretty strong response back to the buy side. All right, so yeah. So with the higher time frame hopefully understood, we can now adjust down to these lower time frames. Start getting a feel for what's happening. So yeah, 630 has already came out. We got the midpoint attacked here, so that's a good sign. Hopefully we could stay above that. Again, we have not only seen this 4-hour order block form, which we're now engaging, but we also now have a regular trading hours gap overlapped with that, along with all the other things that I've just talked about. Again, my overall target, before we get to that weekly fair value gap, we have a new week opening gap here that may be a magnet and pull price up there. So yeah, with all that context laid out, we're going to now try to see if there's anything that we could see that's worthwhile. So yeah, we've got this volume imbalance here too. Seems as though it's respecting that. So again, I'm not interested until we get into a macro, especially because we are in a CPI protocol. So timing is everything. Anything before macros generally will pull you into something that is most likely incorrect. There wasn't really much of a move during CPI. I mean, I guess you could make the argument that this was the move or part of it. CPI is generally a one-sided news event. FOMC and NFP are two-stage. So if there's two news events also, the first one will be a fake move. The second one will be the real move generally. And then, of course, CPI generally only goes one direction. It'll rip people's face off and, you know, not allow people to even attempt to get in. And if they do attempt, they're most likely chasing price. And then sometimes CPI can come all the way back against the move that took place, right? This is the move that took place. What did it do? It came all the way back. So yeah, those are some characteristics for the certain news events. By the way, guys, just a reminder, if you guys get value from the content, you like the stuff that we talk about here, and maybe you've gotten a lot of value recently, definitely don't forget to subscribe and like the video and share the video with anyone you think can either add to the conversation or you know, improve upon their trading by spending some time with us. Right, so that's much appreciated. You know, liking the video is a way to say thanks for what we do, and again, it's greatly appreciated. Right, so do you guys have any questions so far? I know JD had a question. Hopefully I answered that. And yeah, the bias overall hopefully is understood. I'm only looking for buys until proven otherwise. And obviously that's coming to fruition, right? So I mean, you can make the argument potentially that, you know, this ran stops here, shifted market structure, and then could potentially want to run higher from this specific area. I'm looking at DXY. DXY is definitely still on a decline. So yeah, So pay attention for your model. Keep in mind the buy side is what I'm aiming at, what I want to see. Of course, we do have a risk because it's been super aggressive, one-sided since the week started. It seems like we're very much in a hurry, though, to get to where we are headed. So you can make the argument potentially that this here was a YouTube model, right? Run on stops, shift in market structure, fair value gap. This large wick here creates a balanced price range. So it's not unreasonable that they left this middle portion open. The fact that they didn't hit that energizes this run to continue going higher. First target is obviously up here. Right, and then of course, again, we have the new week opening gap up there. So you see how this fair value gap was overlapped. Price displaced through that and basically created a balanced price range in here. And then of course this wick happened as well, right? So you could see all of that on the back end supported by the higher time frame analysis that we spent time on right now, or a minute ago. Everything has, fell into place in terms of the analysis. Of course, I wasn't on the lower time frame to identify this. We were talking about other things, but that's okay. What matters is, are we able to call the market direction? And whether you have a model that shows up or not is more important than me saying, hey guys, buy or sell here. Because if that's what you depend on, you're not going to be able to trade on your own. As much as I appreciate everybody coming and spending time and supporting the channel, I don't want you to be dependent. I share and teach certain things that will teach you to be independent, and my private community students, I'm super proud of, because many of them are finally reaching independence, and some have a little more ways to go, but that's kind of the nature of the game. So just keep showing up, keep being around the right people, focus on one model, and keep applying pressure. Made it. Oh, perfect. Nutty Fafa, it's good to see you, brother. Sorry I've been a bit away, right? Was doing some things. So yeah. So you see this wick here? Let's watch that midpoint. See if it'll hold up as a support level. Okay, so I can say if it does break above the high, this wick will present a potential balanced price range. So you can, if we are going to go higher, you can rest assured that that'll probably be something that is helpful in supporting the buy side delivery. So because the lower time frame moves, or the move was missed, because we were talking about other things, what we do in that scenario is we move up in time frame and see if there is a potential setup or framework that can be provided from a higher time frame or upper time frame to the lower, like 1 minute and seconds charts, and then see if we can find our model presenting itself on a different time frame, just maybe 1 or 2 time frames above. We got a fair value gap in here, so let's watch that. So this wick here, this strong wick, sometimes if there's a gap that's left and there's that overlapping it, sometimes it'll just leave them open. Because in that case, it for the most part doesn't really have to go down there. It does sometimes, still, but for the most part, the logic there is extremely valuable. So yeah, we got this order block here. Let's actually move up a bit higher to see if there's. Yeah, so again, if this high breaks, you could see that this candle is overlapped with this wick here, right? So we've talked about this before, right? If a wick overlaps a candle, the middle portion of that wick should be respected because it's traded both sides essentially. So it's a balanced price range. So it's going to be the same scenario here, right? So if it gets above this high here and DXY continues to fall and the other indices continue to fall, or the other indices continue to rally, then obviously we'll continue to try to support a move going higher, which for the most part up until this point has definitely been active, right? It's been a delayed response for CPI, it seems like. So they basically did a little bit, but they waited till the open to really turn on the acceleration. So you see that volume imbalance, you see the middle portion of this. Let's actually go to the 1 minute and find the first presented fair value gap. The first presented fair value gap is here. So if we're going to continue to trust that buys are going to continue to operate, it needs to stay above this regular trading hours gap. It needs to stay above this first presented fair value gap. And then of course, another layer to that is to observe whether the overnight first 30 minutes of the daily range is also being stayed above, which is right here. So 21. Okay, so there. So let me put this up real quick. So these are just some indications when you're observing the story price is telling you to further amplify your trust in a particular narrative. It's a tool that ICT's talked about, different elements to different tools that ICT's talked about in terms of bias and narrative. Just one of those nuances that most people miss in terms of using these three things, along with 3 PD arrays, along with knowing the higher time frame direction that, and of course, 3 PD arrays that help support your trust. Okay, and it gives you clarity. So if all these levels stay above, what is the reason for us to think at all that price is going to go lower? Unless, of course, it starts breaking through some of these levels. All right, there's no need. So you can rest assured that if you aim at price going higher, if all this stuff stays true and stays intact, you can rely on that opinion. And of course, my trust in particular tools cannot be fully transferred to you unless you're in there practicing what it is that is being taught, because it's just like the scenario where, like, okay, you may trust a person, but if I don't trust the person, if I don't know the person, how am I supposed to trust that person, right? Just automatically, right? I could take your word for it potentially, but in reality, we all want to kind of build trust when it comes to that type of stuff on our own, right? With our own experience. It's the same thing with trading and models that you operate with or watch somebody else use. It's great to see things play out, and it's very helpful for you to start seeing what works and what doesn't work and what may work for you. But again, to trust certain things, it takes time. It takes you being here, watching it over and over and over, seeing the process over and over and over, and then applying it on your own over and over and over. All right? So, always keep that in mind. So again, this wick here is in alignment with this little gap. Here, let me actually go label that. So yeah, I'm waiting for a macro, okay? As I mentioned, very important. I don't care what's happened. I don't care that I missed that first move because I was telling you guys something. I don't care if, it delivers all the way up here before 650. The rules are rules. And if we don't follow the rules, we're going to blow our account and not be here for long term. And that is unacceptable and will not, it's not something you're going to hear from me. Hey, what's up, Adam? Good morning, brother. Happy to have you here. I hope you've been doing well. So, yeah. Looking at the bonds and the yields, obviously there's a slight discrepancy between the relationships that those have. That's fine. We just put that asset to the side and just focus on other ones like the currencies, DXY, and the indices, and watch what takes place. So I'm watching this fair value gap, or this fair value gap here and this order block. But again, we're also keeping in mind this larger view, which has that 4-hour order block that price is pushed away from. Right, so nothing's changed in my overall opinion yet. If something does change, I'll let you know so you can understand why my opinion changes. But nothing's changed. What is there to promote the fact that buys are not going to be in play? Aside from, one reason could be that there's an S&T on this time frame, and then of course on that lower time frame here, right? So that may turn into a problem, but we are seeing that the Nasdaq is the strength holder, hypothetically, right? There's no strength and weakness, but it has the more interest to go higher than the others. And if, of course, if that stays intact, then again, we'll continue to see price march higher, and that will be what we look into engaging. DXY is pulling back into this daily fair value gap. So I'm going to actually move to the 1 hour for the DXY. We got the 8 hour fair value gap here. So DXY is pulling into that. We also have this weekly fair value gap that price broke outside of. Right, so we want to see how that's going to behave. Again, nothing's fully changed overall, higher time frame wise for the DXY from going bearish to bullish. So again, we're just going to stick to wanting to see this go lower. This could very well have just been the manipulation, running price higher, just to try to set this up as a large decline, just building up a premium. Right, so we will see if that is something that is going to be fruitful. We see this wick here. We see that large mid portion of the wick here from that large one I showed earlier. So these are things that we're monitoring here going into this macro. Okay, we're going to study the wick relationships, right? How price is utilizing them. Is it leaving the 50%? Is it smashing through them, right? Like it seems like it may want to do here. What could it be reaching for here? It could just be reaching for this and the midpoint of the wick, right? These are all areas in price that are acceptable for price to play around with while we're still looking to favor price going higher, right? This is one of those really hard things to grasp onto because we want to be right at every single moment and we want price to move right away. And sometimes, especially on weeks like this, days like this, it doesn't want to move right away. So the skill set I showcase in terms of what levels are important and how to read the story, it becomes even more important so you can know when to be patient, when to put your foot off the gas, and then you also learn how to, or have been learning how to, put your foot on the gas, right? So yeah, I'm still watching this, still keeping in mind the 4 hour order block here that's still staying intact. None of this price delivery is going against my assumption for the moment. DXY is looking like it wants to at least attempt to try to retrace, but it's kind of stagnant. If we go pull that up real quick, it's kind of stuck here, and it has declined pretty aggressively so far. We spent a lot of time above the open price, right? So this is, at least for now, presenting a bearish power 3. So a bearish candle. So again, if that takes place, again, it's further supporting our interest to want to see this go higher. This is totally typical of CPI, for them to kind of be very aggressive and then pause quickly. And then, pretend to want to do something, and then it just doesn't do nothing. Or it just rips your face off, right? So, that's why risk management is so vitally important. And that's why ICT talks about CPI the way he does. So, you don't want to be in here trying to gunsling. I know you'll probably go on social media and see Joe Schmo over here putting in 20 lots, making $20,000 or something. But again, maybe that's what some of these traders are doing, and that's totally fine. But comparison is a thief of joy. And, for the most part, that reckless behavior will come back and bite them. You want to have a steady hand. You don't want to have a reckless, wild, home run seeking, every moment type of hand, because it's a very anxiety inducing way to be. And again, longevity is what we're here for. We're not here to excite ourselves or anybody else for a minute, just to do it one time. We're here to do it over and over and over, and we want to be here. So being here will require you to understand when to push, when not to push, and then how you need to operate on day to day versus special circumstances like CPI, NFP, FOMC, so on and so forth. The information I just told you guys here, and I've said this over and over and over, this stuff is more important than when you're going to take an entry. Because if you can learn how to take an entry, but if days like this blow your account, is it really even valuable to know all the entries and tactics if one day will come around and you'll just blow everything you just worked so hard for, right? I mean, when we think about it like that, it's pretty obvious how important psychology and risk management is, so, and it's one of those things you need to learn early. Most people don't want to do that. They want to learn how to execute early without realizing that there's experience that you need, and these landmines are sitting here ready to strip away your joy. See, so everything's holding up, right? It's still in line with the assumption we've had, so that's very nice, right? Very nice, very nice. We've left these equal lows here. I bet you there's an S&T. It's S&T there, right at the lows. And so higher low on the Nasdaq. So yeah, it's really in a hurry to try to get up here. Again, targeting the new week opening gap here is very reasonable, but that is also ahead of us getting to our overall objective, which will be way up here, which may take a little while, right? But when we have areas of liquidity that are that far away, again, previous day's highs and lows, previous week's highs and lows, and session highs and lows, and PD arrays all become very important. And then near-term PD arrays ahead of the higher time frame ones are also very, very useful. So yeah, DXY again is given this nice little pullback here, kind of gravitating into the regular trading hours gap once more. Again, we have a lot of things on the back end, from the first presented fair value gap, prices staying above it, to this balanced price range idea that rocketed price, to the fact that this is holding, and then of course the overnight first 30 minutes range is also very much keeping price above. Generally, this is very helpful. The first 30 minutes of the overnight range. In certain circumstances, obviously, it's going to be rendered useless. But it's always a good thing to keep in mind, because I use it on a day-to-day basis. It's just one of those extra tools for every condition, and it seems to be pretty reliable. So definitely consider identifying that and just studying how, if it stays above it, what happens on that day. If it stays below it, what happens on that day, and then if it bounces around it, right? Keep tabs on how helpful that is as well in that scenario. So yeah, we got these down candles here. I'm assuming that that's probably an order block too. Let's go see. So there's that order block. So we got this wick in there. Right, so again, in this case, you would just start to identify fair value gaps, right, and order blocks, right? Are they holding in price? It seems as though everything has been holding so far, right? And again, your model, right, even in a trending environment, can show itself. You just have to have a reliable draw on liquidity, right? Your process, which it's what we discuss every Sunday, except this last Sunday because it was Mother's Day. But as price prints, you watch for order blocks, you watch for fair value gaps. As long as everything stays intact, headed that way, you just reset looking for your model. If you saw one that took place here and you missed it, okay, that's wonderful. Is the draw on liquidity still available? Okay, if it's available, where's your model going to form inside the price leg that's moving higher to that level, right? Because if you go to the 1 minute, a lot of times there will be a swing low. Price will run that swing low and then shift market structure again in line with the overall direction, even if one opportunity presented itself early on, right? So you keep that way of thinking in mind, and you're able to then open up a whole new world of many, many, many more opportunities using that one model. whatever that is, right? This is pretty much the main exact reason why ICT says you can use one model. You know, that one model can show multiple times, especially the YouTube model, especially breakers, you know, and a few others like optimal trade entry. Obviously, the first initial one's going to probably be the best one, but you know, if you have to catch a secondary one, it's totally fine. Just drop your risk by half or a quarter at least. You know, a quarter if you're really confident with the draw, by half if you're kind of skeptical as far as you know, what you believe it could or, you know, won't do. And so you see the fair value gap in there. Beautiful delivery. All right, so we're inside the macro too, so we'll see what price wants to do. I do think that we are very close to this new week opening gap, so it is acting as a magnet. Order block here seems to be supporting price. All right. Obviously, when price is up like this, again, since you're catching the secondary entry, if your model's showing, you would also cut risk simply off the fact that we're already marching towards a particular draw on liquidity, and it has almost 150 plus points already, right? So, you know, my attention's here. We've had the draw on liquidity right yet again. You know, just it keeps happening over and over and over, you know, so, and we did end up missing this down here because we were paying attention to other things, but that's totally fine, you know. So yeah, watch this order block here, watch this fair value gap. I can say if price was to displace and get down below this low here, that would be a problem for buys. My attention would then go down to these relative equal lows. But again, unless that takes place, and that would still just be to set up further buys, because we're in a buy scenario. Positive news is coming out for the U.S. economy. Trade deals are being made. Technically, it looks like it's bullish. You know, many things are aligned with buy side, so there's no reason to not think buy side. You know, we walked the whole down move that was taking place all the way up to a 1 year order block, and then turned around and started going the other way. Like we've had Nasdaq on a leash since February, which is pretty spectacular. Okay, you know, I've had more students this year succeed in pass funded accounts than in the last 3 years of me being out here being public, which is amazing to see. You know, so yeah, you're in good hands. And some of them are also on YouTube, just on YouTube. You know, so using all the same tactics. You know, some students have their own models, and you know, that's totally fine too. But we talk about cemented non-negotiables that can be used for everybody, even retail traders. You know, when it comes to bias and narrative, if they want to use a freaking stochastic for God knows what reason, you know, they can. You know, doesn't matter what you use. This stuff is extremely lethal. But of course, you obviously want to be a purist. If you're here, it'll probably serve you the best, because that's what I know. You know, I understand the other stuff, but why let it cloud my mindset? You know, so this stuff is too effective and delicious to not specialize in ICT concepts only. It's, you know, there's just too much proof now. You know, there's so much proof that if anyone wanted to quit, they would be upset. Okay, and think about it forever. You know, until they're on their deathbed, they're like, "Damn, I wish I would have stuck to ICT concepts." Right? So, you know, if you are having some trouble recently, just know that we are in a tough environment. Lots of stuff is taking place. You'll eventually be able to navigate these types of environments, because I was in that position, and I remember my thinking. I was like, dude, I'm never going to be able to learn this. Like, this is so hard. I keep getting smacked. I keep seeing this stuff play out, but every time I try to get in, I'm doing it wrong. You know, and you know, we all have those moments. But again, you just got to suck it up and just deal with it. You know, then hopefully you'll get hypothetically punched a little bit less as you progress. You know, if you're here, you'll definitely stop getting punched aggressively by the market. You know. So yeah, you guys have any questions about some of the technicals we talked about today? Again, we called this run to go higher. We had no interest in going lower. We were one-sided. We were not back and forth, right? We didn't have one arrow going higher, one arrow going lower. We laid out a scenario that would create the likelihood for us to continue going lower if those elements were met. They were not met, and as a result, we've been one-sided aiming for buy side. I did miss one move here. I waited for the macro, but there's, like this move here I could have executed. But I'm more focused on, when I'm live here, I'm more focused on teaching you guys, sharing my wisdom, and getting things, mentioned that I know can help you guys, rather than me, looking to try to overly focus on my own interests. I do that enough, and I do quite well. You could put two and two together, assume. But yeah, So again, the PD arrays, as price was printing, given the fact that we've stayed above the levels that confirmed that we were going to go higher, aside from the higher time frame, that being the three elements I've mentioned today. I've mentioned them before, but I've never mentioned them all at once and presented them in a packaged way to validate or invalidate a narrative. Maybe I have before, but the overnight first 30 minutes, regular trading hours gap, and first presented fair value gap, if you couple those with three PD arrays and the other elements that we use for bias and narrative, which is taught on Sundays, it's very, very dynamic. And you could see, visual evidence here in terms of the effectiveness and helpfulness that creates, and the confidence. Again, not once have we mentioned to try to short. Not one time has not came out of my mouth once, and hopefully it didn't even pop in your head once either, because of the things that we've been talking about. Hopefully you guys understood what would have changed the assumption. Remember how I said this wick here, because it was so big, it most likely will not dig down into it if it's going to go higher. If it leaves it, it'll be pretty fast to the buy side. Target was identified as a new week opening gap. That is on its way to our overall target, more long term, maybe the next week or so, which is up here to this fair value gap up here, right? So yeah. I hope this stuff was, or like the process today was clear enough for you guys to watch and get excited about, in terms of the different elements, and then seeing them play out right before your very eyes for the 100th time for some of you. Maybe you guys felt confident and made your own decision to try to engage something in here. Of course, like I mentioned, missing it down here doesn't matter. If I was going to execute, it would have been somewhere in here. If I would have missed that, it would have been in here. Stop would have been below this fair value gap, aiming for the new week opening gap. Right, again, keep in mind, I'm not here to encourage you to execute into a trade that I talk about, because I'm not a financial advisor saying financial advice. I'm giving you the tools to learn how to do it on your own. That's why I didn't mention, hey guys, yeah, this is a beautiful buy opportunity. I'm just not going to do that. It is what it is. And you could, many that are cool with that and take my advice to go implement these things on their own have had amazing, wonderful results. And I'm sure, each and every one of you guys, it'll be the same way if you just adopt that mindset and focus on what really matters, which is, the technical elements and different mindset things that we talk about. That'll get you to where you're trying to go faster. And then, you have to just piece in your own experience and engagement and study and practice with all the tools you've been given to then solidify the journey for yourself. So yeah, first target overall has been met. Beautiful, like gangbusters. we came into the market fairly quickly, made an assumption. You see how fast the analysis was. We had 20 minutes before the open took place at 6:30. Once that first 30-minute fair value gap, or the first fair value gap of the New York session took place, we were already assuming the price is going to favor going higher. We already outlined before we even went to the lower time frame this weekly fair value gap that's above us, right? Obviously, when we dropped down lower into the time frames, we were then able to identify the new week opening gap that has now been targeted, which was laid out as a target. We talked about the wick, things that would have kept us above and trusting buys as it was printing. We talked about things that would kick us into identifying potential shorts, right? And then also we labeled this 4-hour order block. That was the overall catalyst or foundation of this move going higher, aside from the fact that we were going to target up here. And again, the regular trading hours gap midpoint being respected, right? Those 3 different elements, which I for the first time have added into a package, so it's potentially easier for you guys to now go and apply that alongside everything else that we talk about, So I hope all these different elements have made sense today. We'll probably call it a day by 7:30, given the fact that we've been so aggressive. Target has been met. Basically did what we wanted to do. I personally didn't engage. Again, I've been more focused on trying to get you guys to understand these things, because to me, it's more important when I go live to get you guys the information. Again, the information we've talked about, and the fact that I'm going to call it a day soon, doesn't mean that it won't keep going. Again, you want to keep in mind your model, right? You want to keep in mind that we are hitting a PD array here. We are very interested in going higher. The target is the buy side up here, unless we start to see things break down. And I mean, if we break down below this at this point, it's not going to be something very helpful for us to continue trusting buys, right? It may look to want to maybe target these lows here. I don't see that happening. It could very well happen, because if you zoom out of that lower time frame for a second, which you want to always zoom out, you don't want to just make an assumption on the lower time frame. But if you do take a look at what this looks like from these upper time frames, you could see that even if price was to retrace into here, if we were looking at this as the 1 minute, would a retracement to this area, if this was the 1 minute time frame, change anything at all? No. It would just look like a retracement to a discount from this low to that high. So why would it be different if we're looking at narrative and identifying narrative on the daily or weekly time frame in this type of scenario, right? This is an example of how you can get completely blindsided by the lower time frame, and why you have to be solidified on that upper time frame, so then you can be effective when you go down to those lower time frames and don't get fooled. Okay? Okay, I just want to make sure, did what I just highlight make sense to you guys? And show a pretty good example of the importance of higher time frame to lower time frame? And how it can be super deceiving? So let me know in the chat real quick. Yeah? Okay, good. Yeah, it's very important. It's something I didn't learn until, 2 years in, So it took me a little while to really solidify that. But it was there the whole time. And it was, I don't know. I didn't have someone pointing it out. I just had a lot of different information coming at me, and it was a struggle, to try to get everything in order. And thankfully, it comes with time. It's our greatest asset, especially in here. But yeah. All right, Fritz, I'm glad that makes sense. Beautiful. So yeah, with that being said, we could continue to come down to the lower time frames now. The more I get you guys to understand how rooted we are in the higher time frames, the more solidified you can become, the more you understand the higher time frames, the more dynamic the things we talk about is going to be, Because again, this may look like it's going to be bearish on the 1 minute, but if it's not supporting bearishness on the daily or weekly or 4 hour even, we're not going to be bearish. Okay, it has to be supported across the board. Lower time frame has to be in line with what the daily and weekly are doing. Right. Well, I have to say this was a spectacular run higher. Okay, it did wait. See how it kind of does that sometimes? CPI ran up, kind of fooled people thinking it was going to be a slow day, but the Nasdaq ended up picking up and saying, "Yep, see you later, I'm out." And guess what? We were in line with where it was headed, right? We had a strong assumption about where it was going to go. So again, with that element out of the way, you need to reason with yourself and ask the question: was your model present on a time frame you like to engage in? You may not like the seconds chart, right? You may not even like the 1 minute. Okay? But, depending on which time frame you're comfortable with executing on, especially depending on what kind of trader you are, it's going to be very important for you to submit to the fact that if it doesn't show up on one time frame that you like to trade, you may have just missed a move. Again, I mentioned the tactic of, if you miss a move on the lower time frames, maybe you are a seconds trader. If you miss a move down here, like I said, you just move up a bit in time frame and try to identify, where your model can be presented or a logical level you are okay with engaging on a time frame that's a little bit above the one that you normally execute on. And if you can't find something there, you have to just submit. I missed a move. I missed the move today, right? I missed 3 moves, right? But it doesn't matter. Technically I didn't miss them because I intentionally didn't execute because I was teaching, right? Just talking about important stuff. Not want to be distracted by an entry if I'm trying to teach very important stuff. But again, we laid out the different PD arrays and whatnot. But yeah, don't forget to reflect every day. If you miss a move, especially, or if you take a loss, right? Dissect those moments, because those are times when you'll get better. It'll put your experience at a different level the more that you go through these moments. And then the more you can get at a drawdown, you also end up becoming like really proficient at a drawdown recovery. There's a process with that as well, which it's a lesson I have planned for the future. Kind of talked about many of the elements already though. But yeah, there's a specific protocol for that, which you want to definitely try to focus on eventually, preferably early on. But again, it's an experience thing. You got to learn how you're going to go about that, how you're going to manage your mindset, so on and so forth. But yeah, if seeing this move happen and you missed a move gets you down on yourself, or makes you feel like, oh, I missed a move, it's the end of the world, right? Like if that's at all the way you think, even in the slightest bit, you got to remember that is a devil on your shoulder, right? The angel should be telling you, hey, it's okay. There's another day, right? We hop on every week in my private community every single day, and we see that there's so many opportunities. It's ridiculous. It's absolutely ridiculous for us to be worried about missing a move at all, let alone missing a move on CPI. We were right about the narrative. At any moment, we could have pushed a buy if it aligns with our model, right? If it didn't align, at least we got the narrative right. But aside from that, whether we got it right or wrong, the process that got us to this particular situation, that is the thing that's most important. Many people still to this very day hit me up talking about entries. Like, I need an entry. I understand bias and narrative. I just don't know how to do the entry. And then they send me examples, and the logic for price going higher is not correct. Or they say I used a YouTube model, and they're not taking the YouTube model at all. Or I use a breaker, and it's just not at all. It's just not there at all. They're doing it wrong. So we have to be very aware of what's actually taking place in our overall engagements. And understanding that type of stuff comes from reflection, and not taking trades is vitally important because we can identify the most important aspects of things. So when you miss a move, it's totally fine. Don't ever worry about it. Again, I emphasize this all the time because I get messages every single day about either missing moves, risk management. They understand bias and narrative, apparently, but they just need to understand how to execute, how to enter. Bias and narrative is actually part of your process as well. So, and that takes a lot of time to really get it solidified. You have to know the right things, but the right mindset is number one. Everything else crumbles if risk isn't in place and mindset management is not in place. Little processes around that. But yeah, again, this has been a spectacular run. I'm curious to see, did any of you guys take an execution? Yeah, beautiful, Tyler. I love it. Can you please share that with the private group? I appreciate you, brother. For those that don't know, I'm Reckless is my little brother. He does sports betting and is a freaking savage. You should go check out what he does as well on his YouTube channel if you like sports betting stuff. He is a freaking savage, and he can, give you that skill set as well if you're open to learning from someone that also proves that they are freaking amazing or try to be amazing at a particular skill set. And he's now a trader too, which is amazing. So yeah, Tyler, share that with the private group, please. I really appreciate it. Make sure you try to throw it in the Indices chat. Beautiful. Tyler, do you mind if I share that with the group here? Yeah? All right, cool. I'm about to just pull this up for you guys to see. It's a beautiful example of independent thinking. A beautiful example of me not needing to say, hey, get in here, do this or do that. This happens over and over and over. It's special because, this is my little brother, like I mentioned. It's very special to me to see this. I'm super proud of him. I'm super proud of everybody in my private community too, right? It's special for them to do it as well. It's been an amazing experience to get around these amazing people and see them thrive and just have simple adjustments, simple mindset changes and process solidifying, focus and where to focus, what's important, how to do bias and narrative, structure a trading plan, and everything else related to effective trading. It's just been amazing to see the progress. But yeah, my little brother here, right, ended up engaging this beautiful, balanced price range idea, fair value gap, run on stops, shift in market structure, fair value gap, YouTube model entry, like I said, continuations. He did it on the 15 seconds chart, which is amazing. This is an example of what I mentioned earlier. The initial move was down here. Yeah, we may have missed it. Who cares? But if you look up here, you could see, right? Run on stops, very small, also a previous week's high. But there's a shift here, displacement. Came back into the fair value gap. He executed. I'm assuming the stop was probably either below here or below the fair value gap. And absolutely bread and butter. Doesn't need more. Doesn't really. It's not really needed to get less, right? But he doesn't need more. This is all he needs. This is all you need too. Each and every one of you, 20 to 30 handles or points, whatever you want to call it, in the indices, right? Specifically the Nasdaq, or 5 to 10 points in the S&P. Okay, that's really all you need. You don't need much more than that. And if you do that over and over and over again, you have the opportunity to have potential results like what I'm about to show you. If I could find it. This is one of my students. If you hit base hits and focus there, you have the opportunity, being around this type of community and a mentor and other traders that prove that they know what the hell is going on and can do it consistently. This is what your months can look like. If you think $600 is not enough, you have lost your freaking mind. You might as well go buy a lottery ticket because you obviously have the wrong mindset. Okay, but this is amazing. Okay, some days are bigger, some days are less. Notice the days that overtrading took place, he got bit. Some of them he got away with it, but for the most part, you don't want to have to deal with this. And he's made that adjustment too, which I'm proud of him too, Sebastian. But yeah, right. So keep in mind that the minimums are all you need. If you think it's not enough, here's your proof that it is. Okay, social media is a double-edged sword. It can help you network and get around people that can help you, but it can also really skew reality for you and what is truly required to be successful, specifically in this industry. You don't need a lot to do a lot. You just need time and consistency and processes that are reliable. And obviously it helps to be around people that can help you move towards that direction. Okay? And he passed the funded account. Right? Amazing. But students out here crushing it. That was his equity curve before he started with us, and then it ran up. Right? Just listening to us for 1 month helped him. You know what I mean? Go back to the community discussion, right? He started that challenge, just for those that don't know, some of you guys do know, but he started the challenge when he joined the community, right? This is how it's, ended up first 3 weeks in. And, of course, he ended up doing this. Doing this after, towards the end of the month. Right? So, amazing. So yeah, hopefully that's encouraging to you guys, and encourages you and promotes the fact that you're in a place that can be very, very helpful. You're around people that can be very helpful, especially if you get in my private community. You can also join my free Discord. There's also amazing people there, many that have passed funded accounts just off of spending time with us on YouTube. But again, there's always that option to partner up and join the private community if you do choose to do so. If you need a little bit more support, more access and whatnot. So yeah. So again, I hope that's encouraging to you guys. I show those types of things to encourage you. I think those are better things to show than me showing you my days that I pull down things that are probably unrealistic for many traders early on. That is real world stuff, right? When my students are doing it and slowly getting their way up there, those are the real things that can be a lot more meaningful to you. I know they would have been for me, instead of me just looking at people making $100,000 a day when I couldn't even make $50 a day. It was discouraging. So that's part of the reason why I don't shove my own profitable amounts down your throat. So I do twice a year. That's it. In February, January, and then sometimes towards the end of the year. Right? Just for those that, may like to see that. But again, that's not helpful to you. Okay? You could just, again, show up here, watch what we do, see how accurate we are, and put 2 and 2 together, and, let your imagination run. Okay? But I think that seeing my students do well is amazing, and I think it's very beneficial for you guys to see, everyday people. I'm an everyday person, I spend a lot of time on this though, but it's important to see everyday people, people that may be at the level of experience that you have, end up thriving because they just get the right information, get around people that sincerely want to help them succeed, which is what you get when you're here, even on the YouTube channel, but even more so in the in my private group and even in my free Discord. So yeah. So because we've traded all the way through this new week opening gap, I'm going to assume that, it will probably not get back down there, back down below it. It'll probably continue to hold up in price here. And then, of course, potentially march our way up into this level. I can tell you right now that if DXY displaces and starts really rampaging to the sell side, we will probably have no issue getting up into here because price is so aggressive, right? It's super extended here into a premium. There's a risk for price to want to retrace and then maybe come down and stop some stuff out. I can say that if we break down below this low, let's actually move up a little bit. I could say that if we lose this fair value gap in here, it'll probably want to give a more meaningful retracement. Otherwise, if this stays intact, price will, potentially continue to run higher. I'm assuming, for now that, DXY continues to fall, we should be able to stay above the new week opening gap. It may act as another launching pad, which generally is the case in scenarios like this. So it could act as a starting point or it could act as a target when it comes to the new week opening gaps. Right. Today it seems like it may be acting as both a target and then possibly a launching pad. So if I was to look to execute, say this was a normal day, I would have pretty much been done because I would have, dug into some of the things that we talked about earlier. But let's just say, hypothetically, I missed many, many moves, right? I'd first of all have to sit and think, are we still in line with what's being assumed? Which, the answer to that is yes, right? We're looking for buy side, still delivering. But my assumption now, would be the next opportunity I'd want to look for would have to be inside of the 750 macro. And that would be the last macro before the lunch hour. And then if I don't get something at the 750 macro, I just won't take a trade for the AM session. So that would kind of be my protocol when it comes to potentially, missing a move or multiple moves, and then how my mindset would adjust. Right. So yeah. And none of that process obviously is thinking, oh, I missed a move, so I'm never going to be able to trade again, or I'll never get another opportunity, or I suck at trading, or any of these negative things that comes with any type of slight negative thing in the market. Missing a move is not negative. It just means that it just went without you. Even if you lose, it's not negative. It's an opportunity and a chance for you to grow and become a better trader and understand how you can be better next time. There's no negative involved in that. Maybe there's a little bit of money that gets taken out of whatever account for a fee to learn more information. But nothing is negative. You have to make it so nothing in the market's negative. ICT said this before. I didn't really understand it. But, over the years, I've understood and started to appreciate the things that he's mentioned like that, right? Like, you have to make everything a positive experience. It starts with journaling positive things too. If you continuously do something over and over, it becomes a habit. Same with thoughts. If you think something continuously over and over and over, your thought patterns become a habit. So if every time you get in the market and you take a loss and you start beating yourself up, it becomes a habit, a detrimental one, because then you develop the beaten dog syndrome, which ICT has also mentioned, which is, dogs flinch, right? If they get beat down, they're going to flinch when their owner comes around because they're anticipating something negative. Well, if you get, beat up in the market and you think super negative about it and you don't follow the rules and, get hurt by it, the next time, over months or even years, the next time you try to take a trade, you're going to have that beaten dog syndrome and you're going to have to work so hard to get out of that way of thinking. And it does not go away quick when it becomes a habit. Habits are hard to break, especially mental ones. You have to intentionally stop thinking negatively, and it's hard sometimes because we're very ambitious and we want to hurry up and get to where we're trying to go. But again, you got to realize that there's certain things that have to be understood, and you have to operate and make changes in certain ways. That goes with your actions and your thinking, because both work together along with technicals and the other aspects of things for you to become a profitable, or at least a consistent trader when it comes to calling the market. And these are all things that you want to have worked out when you get to where you're trying to go. Because if you become profitable, but you still have all these negative things, trading is going to be a miserable endeavor if you try to go full time. Because it's going to be too stressful. And then at some point, if you allow it to, be that way, at some point, it may not end up being something you want to do anymore. And this is such an amazing industry. You want to treat it with care. It's very special. You could pass it on to someone that you care about. You could change people's lives. And, so treat it with the importance and the gentleness, at least toward yourself, that is required. You want to be very gentle with yourself. This isn't like sports where you go, oh my God, you freaking idiot. You need to do better next time. Hurry. You can't pump yourself up like this is a football game. Sometimes negative stuff is used to get people pissed off and riled up so they can go perform better. In this is not like that at all. If you try to do that, it's going to be a problem. Okay? Because then you're just going to be scared. You're going to be terrified. And hopefully the stuff that you guys learn here, hopefully it's helped you lessen the fear if you've had any or struggled with it. And hopefully you can see that this stuff is super reliable. And, the different things that we talk about, from psychology to the technicals, I hope you see that, this stuff, if you apply it correctly in practice, it will serve you very well. So, yeah. See how we're watching this fair value gap in here? Just want to see what it's going to do. Again, if it holds this fair value gap, that's amazing. Because we're going to still go higher. This is coupled with the upper portion of the new week opening gap. So if this stuff stays intact, right, it should continue to be able to rage higher, possibly get us up into this level. So I always ask this question, especially on my YouTube channel. Out of all the things that we talked about, I know we've talked about a decent amount. Just a side note also, if you guys ever have any confusion when I'm teaching something, spam in the comments. Hey, hold on, or something like that. Okay. Just keep that in mind. I don't want to leave anybody behind. But yeah, so like I always ask many of my students in my private community and then here as well, out of all the things we've talked about today, what are like one or two things that you have either been studying that we've talked about, or one or two things that just specifically from this call may be impactful for you, right? Or that you see could be impactful for you. If you guys could name one or two things in the chat, that would be amazing. Either from today or something that we've talked about before that was also implemented today. I really like to know where you guys are at, what's helpful, what you guys are concerned with. It helps me help you. Right, so yeah. Another wick was cool, okay, for sure. Yeah, it's fascinating to see that, huh? So again, it's just, I've been really, really hammering balanced price ranges in my private community. I've mentioned couple things here and there on the YouTube channel that's helpful for you guys. But the balanced price range idea, I've really started zoning in to, because we're at a level in the private community that there's still a handful of people that are still climbing, but most students in the private community are doing very amazing, at least in the technical aspect. Things are very much in line. Many things make sense. So we're going to start incorporating a bit more advanced things as we move forward. More or less like amplifications to certain topics to make it so they're even more important, certain things. Like, for example, the balanced price ranges, right? We've talked about that in great detail. Many different perspectives from, all the different elements and shapes or patterns that create balanced price ranges. So there's like a handful of them. It's not just one specific phenomenon. There's a handful. Like today we showed the wick one, right? Created a BPR, stayed above, and absolutely delivered. Higher time frame wise, right? The wick I talked about was in line with that. It helped us support price going higher. How the midpoint's important, yeah. Keep in mind too, Tyler, that the wick that we saw was on one time frame, but the logic that we used related to that wick works on every single time frame, right? Obviously, you want to make sure you're framing things from the higher time frame because it's more important to the narrative. But again, the same logic that's used to enter on the seconds chart is the same logic that's used when we go to, like, say, the daily. If this same wick phenomenon takes place but on the daily chart, the same thing will be expected, right? So, that's kind of the same, or it is the same with every other concept that's taught in ICT concepts. That's what they mean when they say that price is fractal. Okay, this basically meaning that the same concepts we use on one time frame can be used on the other time frames, right? Like, for example, the YouTube model too. This is a very easy example to highlight it, right? The YouTube model can be seen on the 1 minute, but if you go to the daily chart or 2 hour chart or 1 hour chart or weekly chart, the same rules and dynamics can take place eventually on those time frames as well. The one on the 1 minute may not be the move that's setting up on the daily for the YouTube model, right? But it's very much universal. Just, again, depends on what time frame you're on. Nutty Fafa said some important things are market maker models, 3 PDA violation rules, and just continuously seeing the same stuff happen over and over and over. Yeah, Nutty Fafa, you're one of them that's on YouTube that is doing absolutely amazing. Okay, your progress and things you've been sharing, it's just amazing, man. I love to see it. And again, I'm grateful for your support here on the YouTube channel. Maybe one day you'll be in our private community, but regardless, whether you decide to do that or not, you're still family, and I'm here to support you if you need any help, okay? I'm glad that those things that we talked about, that you mentioned, are helping you. So yeah, I'm looking forward to seeing where you're at in 3 months, 6 months, a year. It's been amazing to see since this day that you started to the things you talk about now. It's definitely a very fun thing to watch. So yeah. But yeah, guys, I think I'm going to end up putting a ribbon on this. We've talked about a lot of stuff. We identified a very beautiful opportunity. I personally didn't engage. I was more focused on sharing certain things. Some students did engage, so I'm proud of you guys for doing that. Again, and I hope that everything made sense so far. If there's ever any questions or anything you guys have, definitely don't hesitate to shoot me a DM. And again, don't forget to like the video and share the video if you get value from the content. Definitely subscribe if you haven't already. Again, those are just some ways you could be You can thank me for free, and it also helps the channel. And then at the end of the day, you also are helping others get in front of this content as well, by helping YouTube know that they need to push this content to traders that could potentially use it. So yeah, with that being said, again, thank you guys for the support. Appreciate y'all hopping on and hanging out with me. And we will potentially be live again on Thursday for you on YouTube because I missed Sunday. So I just want to potentially give another day to you guys because I did miss Sunday. So yeah, we'll see if I can work that out. But yeah, otherwise we'll be live on Sunday. Back to normal schedule. And yeah, so it's CPI still. It's a more high risk week. So please don't do anything dumb. Live to fight another day, because as always there will be another day to trade, right? And we'll be here for it. All right. So God bless you guys again. Thanks for all the love and support, and I will see y'all either on Thursday. I'll keep the update going in Discord, the free Discord, to let you guys know whether that's going to happen or not. For the most part, I do believe that I'll be able to make that work. So I'll let you know if that changes. But yeah, if you haven't joined the free Discord, definitely join the free Discord. And yeah, with that being said, guys, God bless, and I'll see you guys then.